Hi, everyone. Welcome to the official ESOP Radio, episode 6 of the ESOP Boot Camp. Today, it's all about valuation, explained simply. I'm Trevor Gilmore, CEO of Menke.
And I'm Ben Spadt, investment banking with Menke.
Today, we will discuss 3 things about valuation and help you understand what your company is worth. Those 3 things are: number 1, valuation basics. What type of buyer is an ESOP? Number 2, how your cash flows drive value. And number 3, who sets the value? All right, Ben, let's kick it off. What type of buyer is an ESOP?
Thanks, Trevor. And we've talked about it a number of times that an ESOP is a fair market value buyer. But what does that mean? And fair market value basically begins with we have a willing and able buyer and a willing and able seller having an arm's length negotiation over a company in this case, or a portion of the company. And then the market essentially is the ESOP itself. That's where the shares are going to exist after the transaction takes place. We're based on reality. It's not some sort of hype or any strategic buy or anything like that. And then that fair market value, we're not utilizing this approach where you arrive on a single number. That's the number you transact on. It is really a range, and that range is brought to the negotiation so that in that market, we can have a conversation and create that arm's length transaction. And part of this is art, and that's that back and forth to create that transaction. And then there's science, which are the cash flows of the company in this case, and how that company operates. And that leads us to number 2, how those cash flows drive value. Trevor, what do you want to say about that?
Yeah, so thanks, Ben. And you gave us a nice background to set the stage on how an ESOP transaction works. It's a fair market value, arm's length negotiation here, seller, buyer, negotiating on price and terms. So let's talk a bit about how cash flows drive value. So by and large, ESOP is a cash flow buyer, and that means that the valuation range that the ESOP is going to trade in directly correlates with the company's cash flows, because the ESOP has to be able to sustain itself, both to support the transaction and in the long term. And so it's very much rooted in a cash flow valuation model. When you take a look at cash flows from a valuation perspective, you typically start with the most recent 5 completed years going back, and then also projections. We like to see 5-year forward-looking projections, understand how those are developed, understand the marketplace of the company, its competitive moat, and intangible aspects as well that you mentioned. And that's the art. So that's management depth, the company's unique products, services, macroeconomic conditions, microeconomic conditions. How strong is the balance sheet? How long has a company been in existence? And also taking a look at market comps as well, above and beyond just the company cash flows, seeing, okay, what is similar companies traded for with a financial buyer if they're published? And, there's databases out there, et cetera, that we subscribe to that have those transactions reported. Also, you take a look at this concept called cost of capital. And if for you listeners out there who have heard of multiples, if I sold my company for 7 times EBITDA, well, that multiple is built up by what's called cost of capital and some other considerations in there as well. Big part of cost of capital is interest, and then also the perceived equity cost for someone to invest in your company. And that's how you get a multiple in there. Your brand and people, that's a huge component. We talked about that earlier. And all this comes into play into what is called the valuation range. So Ben, any other insights there into cash flow buyer and ESOP cash flow valuations?
I think you made some great points about how important those cash flows are and getting those cash flows represented correctly. Sometimes you'll see, income statements or financial statements that are presented in a way that might be confusing or something like that. So it's really important to make sure that those cash flows are telling the actual story of the company. And I think it's an incredibly strong point that all of that boils down to that cost of capital. How much would an investment in this company cost? And go ahead, sorry.
And as an informed seller, you want to know the value range of your company before you even decide to go down this ESOP path. That's where we always start with our clients. ESOP fit analysis. What is your company worth? Minority basis, control basis, and do this complete exercise here. So you uncover 1, what the value range is, and 2, if it's interesting to move down that path. I'll give a simple example here. Recent transaction, we did 100% ESOP transition company is a consulting firm. Adjusted EBITDA was about $3 million. And overall, the negotiation took place in that 5 to 6.5x EBITDA range. Company had a clean balance sheet, and so on. So often you'll hear EBITDA multipliers when people discuss value because it's easier to explain. That, it's the one metric that is super easy to understand, but it's both art and science. A lot of factors go into it to create what that ultimate value range is. Let's move on here and talk about point number 3, who sets the ESOP value? Ben, walk us through a transaction and what it looks like when you get ready to negotiate and what that arm's length process looks like.
That value is not set by you or I, it is set by the market. And in this case, that ESOP is the market. And it just has to be an arm's length negotiation and at fair market value. So from the seller's side, there's some work that is done to create a range of value or a calculation of a range of value. But additionally, the trustee that's hired to negotiate on behalf of the ESOP hires a valuation firm that is independent and will utilize those qualitative and quantitative aspects of the company to derive that range of value. And that's sort of the goalpost in which you're negotiating to arrive at that final transaction price. And the biggest thing is the difference between price and value here. That value set by the market, but an important distinction is the price is what, at the end of the transaction, when it's time to close and all the money's wired, what is that dollar figure that was exchanged, that consideration for these shares? But value is how much is the company worth to me as a seller, but also what's the company worth to the buyer, the ESOP? And that's where that range comes in. So it's an important distinction, but that range is where we start and sort of drill down from there to get to that transaction price and close the transaction. And that trustee that I spoke about, they're a fiduciary and they have a fiduciary duty and responsibility on behalf of the ESOP, on behalf of the buyer, and ultimately the soon-to-be shareholders, which are the employees of the company, to make sure that they are transacting at fair market value and getting the deal that they signed up for, so that it's not, a minuscule benefit to the employees, or they're not paying too high a price where it really hamstrings the company.
Exactly. It's always that fine line with these ESOP transactions. Fair market value, ensuring that everything transacts at an arm's length price through that negotiation. And the price you end up settling on, that can be different than the value, because price and value are two different things. The price is part of the term sheet negotiation that has other aspects, in there.
One
codified
thing
in there.
Neglected to mention was the amount of regulation from the Department of Labor, ERISA, from even the IRS. They're all looking at this transaction. So to have it be that arm's length transaction that you spoke about, that's incredibly important.
Exactly. So in summary, we hope you learned something new today. Number 1, an ESOP is a fair market value buyer, which means it's rooted in reality to your cash flows. So the ESOP does not come in and pay, some insane multiple of revenue that you'll see, right now AI is hot. So you see these AI companies with no revenue and maybe no forecasted revenue achieving valuations of 100 billion, et cetera. ESOP, not the case, because it has to pay for itself. Company cash flows have to make sense in that value. So a very strong emphasis on cash flows. And 2, it's an arm's length negotiation as well. So being armed going into the negotiation, knowing what your company value is essential, and things change. I've worked with a lot of clients who, hey, we've done the initial value work in, say, January, February, and now we're gearing up for the transaction in Q2 or Q3, and the company's won a lot of large contracts between now and then, right? So backlog and overall outlook has changed drastically. So it is a moving target a bit, but it is always rooted in reality, which is cash flows. And then never underestimate as well the art and science components of this too. So intrinsic value, that's a big part of this as well. When you think, hey, what is this company truly worth? So Ben, you're an accredited business valuator. What do you love most about valuation?
What do I love most? I would say it's learning about all of these different companies that makes America what it is. We hear about the big players, all the FANG companies, Facebook, Apple, Amazon, companies like that. But realistically, getting to meet these business owners, these CEOs, and I don't really have to say much initially. I say, tell me about your business. Tell me about how you grew this business. And they love telling you about how they started, some of the early struggles and then how they're successful now. And I think that's amazing because that's what makes America tick and makes us grow as a country. And it's really exciting then for those owners that are excited about their company to then become excited about selling to their employees. And it goes back to our whole culture conversation, things like that. It's just really exciting.
Hearing the stories of the business owners, that is one thing that really excites me as well with our client base and what we do. Hearing the story of the company, hearing their journey, it's fun. And smart valuation codifies all of that. It makes for a smart deal.
Absolutely.
So I hope everyone learned something new today. Reach out to us on LinkedIn, Trevor Gilmore, Ben Spadt, Menke page. Also check out Menke.com. We have a lot of client case studies up there, ESOP news, and so on. Interested in talking directly, reach out. We can talk about ESOP fit, etc. Have an awesome day and join us for episode 7.
Bye.